our processing department will structure your file, which will allow us to aggressively negotiate with your lender all the possible options or workouts that are available. There's many different types of options that a lender or the government or your investor can offer on how they can assist you in lowering your mortgage payment by reducing your interest rates, by lowering your principal balance owed, or even by extending the term of the loan that the mortgage is under. We are specialists in aggressively negotiating all these options for our clients. There's not a lender in the mortgage industry that wants your property. Lenders would much rather be willing to negotiate or reach some type of workout to totally avoid going into litigation or going down the foreclosure avenue. It's a dead-end street for most lenders. Most properties, especially in the state of Florida, are upside down, where the current homeowner actually owes more on the mortgage than the actual value of their home. This puts the lender in an uncomfortable position. If the lender ends up going into foreclosure on that homeowner, it's most likely going to take them 12, 24, and in some cases 36 months to execute a foreclosure. Now, with a property that goes into foreclosure, the outcome for the lender is normally a property getting auctioned off for pennies on the dollar, which normally means the lender has more to lose than our clients do. No lender wants to be part of this outcome. They would much rather be wide open to negotiating a favorable outcome that meets both parties, that satisfies both sides. We have been successful in reaching favorable outcomes for our clients by getting their interest rates reduced, and we've seen rate reductions as low as 2% on primary residence. Most of these rate reductions at 2% are not fixed for 30 years. They're normally fixed for 5 years. Those rates then adjust up to about 3% 12 months later. They also have a second adjustment up to about 4% for 12 additional months. They will finally adjust and convert into a fixed rate somewhere around 4.5, 4.75, or whatever current market interest rates are at the time, but never to go any higher. So with a rate reduction in itself, it'll be very beneficial to helping to reduce your mortgage payments. Well, the second option we have is an extension of the term of the loan. Most mortgages have 30-year loans. By amortizing your loan by an additional 10 or 20 years, we're able to reduce your mortgage payments significantly. The third option is a principal balance reduction. There's several different options we have with principal balance reductions. The first option is the most favorable. It's a principal balance reduction permanent forgiveness, where the lender can permanently reduce what you owe on your mortgage, where you will never pay back a penny of that reduced amount. Here's an example. If you owe $300,000 on your loan, the lender can choose to reduce that balance by, let's say, $50,000. They can permanently reduce to $50,000 and permanently forgive that amount, where the client will never have to pay it back, leaving them with a new balance of $250,000. And these are just random numbers I'm giving you for an example. The second type of principal balance reduction is known as a principal balance deferral. Same example, the borrower decides to take $50,000 off of the balance, and he can defer it to the back of the loan. What happens is the new mortgage payment is based off of $250,000. The deferred amount gets tacked onto the back of the loan. So when you actually pay off your mortgage in 30 years from now, that's when you have a balloon payment to pay the principal balance deferment of $50,000 that's tacked onto the back of the loan. The nice thing about a principal balance deferral is today it's $50,000. In 30 years from now, it's still $50,000. There's no interest that accrues, so it's basically interest-free. The third type of principal balance reduction is known as a principal balance settlement. We've been successful with lenders, mainly with second and third mortgages, getting them to accept settlements for pennies on the dollar. Example, we've settled a $362,000 mortgage for $21,000, which is approximately 6% of the principal balance owed. So again, here is a very favorable outcome for our clients when the lender had the option to process a foreclosure but chose to accept a 6% settlement compared to going down a foreclosure avenue. See, we know the position of the lenders. We know what they're up against. This gives us a tremendous advantage when negotiating with them. We know what they stand to lose, and we know that they would be much willing to negotiate with us to avoid a foreclosure and reduce the mortgage payment by putting the client in a position to afford their loan.